Hello friends, welcome back to the channel. I haven't been posting videos in the past 2 weeks because I was having cough, so need some rest. I'm feeling well now. Let's jump into today's topics. Few days ago, I was watching one YouTube video. I don't want to name the YouTuber. The investment guru was giving his investment outlook on what is going to happen in the second half of this year. This is what he said. I don't foresee that technology stocks can increase multiple fold this year. So if you have been making some money, it is time to take profits. Take some profit off the table because the stock market is going to come back down again for you to buy in again. It will be a sideways market this year. You got to know when to sell. Wait for another corrections to come. This kind of investment outlook are quite common. If you log into CNBC and you will hear many different predictions. At any point of time, there will be bullish statements and also bearish statements. In this example, Morgan CEO Jamie Dimon predicts a boom for the US economy. A combination of excess saving, deficit spending, vaccinations, and euphoria around the end of the pandemic may create a boom that could easily run into 2023. That could justify high stock valuation, he said. Rapidly raising rates to offset an overheating economy is a typical cause of a recession, but he hopes for the Goldilocks scenario of fast growth, gently increasing inflation, and a measured rise in interest rates. For those who hasn't heard of Goldilocks economy, in summary, it describes an ideal state whereby economy is growing steadily, but not so much that may cause inflation. This state is ideal for investing because companies are growing and accompanied by loose monetary policy. Back to the investment guru statements. The economic outlook that said market is going sideways, to me this is just a prediction. Anyone can make a prediction and over time we can validate whether it is true or not, so I have no problem with that. I want to bring the attention to the part regarding taking profits. There are many approaches in investing. Some people like to stay nimble in the market, selling when the market is relatively high and buying in back when the market is relatively low. If this is done right, you can enjoy good profits even when the market is zigzagging or going sideways. However, to me, this kind of short-term tactical strategy is a form of trading strategy, not a long-term investment strategy. To illustrate this, let's together learn from the richest person in the world, Jeff Bezos. He currently has a net worth of close to $200 billion. He founded Amazon in 1994 and brought the company public in 1997. This is the share price of Amazon in the early years. How did he become so rich? Not many people know about this. What he did was that when the Amazon share price shot up to a high level, he sold most of it. Then after it dropped, he bought it back again. Then he sold again and bought it back. And he sold again and bought it back. So he gained enormous profits from these trades, and this is how he becomes so rich. Well, actually, that was just a joke. I've checked the founding report. Jeff Bezos has never traded his Amazon stocks by going in and out of the stock market. So he definitely didn't get rich by trading. What he did was that he built a great business that transformed the e-commerce in the US and much of the Western world. And he built a cloud business that's still leading every other competitors. Over time, the worth of the business grew and hence his net worth grew significantly, making him the richest person in the world. Majority of his wealth is from the Amazon shares that he still currently owns. Well, if you have seen the news, recently Bloomberg reported that Bezos sold 2.4 billion of Amazon shares. This is not concerning to me because, first, this is not the first time he sold Amazon shares. He has been doing this almost every year since 2012. On average, he sold around 1 to 2 million shares per year. Second, after the recent share sales, he still holds around 51 millions of Amazon shares, worth around $170 billion. These are the fortune that Bezos currently owns as a result of his diamond hands. We all should learn from Bezos. So back to the topic on time to take profits off the table. Would I sell my holding now just because the stock price is relatively high and one YouTuber guru said market is going to go sideways? I personally will not do so because it is very clear in my mind that I'm investing for the long term and I'm not trading. In fact, since this YouTube channel was created, I only sold a handful of times. I once sold Palantir because I said I don't understand the business and not comfortable owning the business. I also trimmed my Tesla shares after the price went up so much in the second half of 2020, which clearly was a mistake. Most of the time, I've been accumulating stocks, specifically companies that have good products and services, strong fundamentals, great culture. Companies that are able to grow faster than the economy because they have strong moat in their respective business. Take a look at Apple. I just keep accumulating. Some shares were bought at price higher than current price, meaning I made some losses on those trades. But these are fine as long as the company is executing well in the next 3 to 5 years. Amazon. While Jeff Bezos is selling his shares to fund his space company, I'm busy accumulating their shares. I think Amazon is executing well and will probably be the first company that worth $3 trillion market cap, surpassing Apple and Microsoft one day. Microsoft, they are firing on all cylinders now, both their cloud gaming and even their legacy business such as Windows. Never sold one share. TSMC, some believe that Intel under Pat Gelsinger's leadership will pose a threat to TSMC. I don't think so. US is behind in terms of manufacturing simply because there are not as many talents in the manufacturing business. Smart people want to be in software business, venture capital, investment banks. To them, manufacturing is not sexy enough. And Intel also does not have cost advantage, hence they need support from the government in order to compete. Government support is only momentary in my opinion. Never sold one share of TSMC. For me personally, I will not take profits off the table. In fact, I will continue to buy these shares because I believe that the company will be worth more over time. Does that mean that I think that share price will keep going up? No. Share price could go up and down over the short term, which I don't care. If it drops, it will make them a better buy. Of course, if you are using some trading strategy and want to be nimble in the market, there is nothing wrong with that. Just need to remember that these are meant for short-term positioning. Thus far, I have not known any successful investor that getting in and out in huge amount frequently. Most successful investors have a long-term portfolio that they just hold and do nothing. Some will have a separate portfolio to trade in and out when they feel like it, but these are optional in my opinion. Next, I want to give a quick update on my portfolio. Current portfolio value is at 286,000. This is in Sing dollar. I have been putting monies in the portfolio continuously. In general, I'm still bullish on the market, especially over the long term. I expect that the portfolio to hit 300,000 milestone this year. In terms of the performance, the year-to-date performance is doing okay but still lag behind S&P 500, mostly due to the underperformance of the tech stocks relative to the broad market, and also I have exposure in Chinese tech stocks that have done badly this year. I do see great value on these Chinese companies like Tencent, Alibaba and Meituan. For those who are interested to look at the details of the portfolio holding, here you go. If you want to follow more closely on my purchases, I do share in the Telegram group, link is in the description. That's all about today's video, see you in the next one. Cheers!